What is going on, Lucid fans? Welcome back to Financial Journey. I want to start off by talking about Cathie Woods and what she recently said about the EV market and what that might mean for us as investors, bigger picture. Outside of that, talk on why big money cannot stop buying Lucid and go over all that fun jazz. Before I get into any of that though, making sure you guys hit that thumbs up and subscribe is always greatly appreciated. With that, let's get right to it. So I just want to start off by saying happy Thanksgiving to all the Canadians out there. Definitely a fun day for Thanksgiving. Down roughly about 4.71%, and we are currently on a little bit more of a landslide, as you can see on this intraday chart. So definitely a fun day, but when it comes to it though, Cathie Woods, as though she's a little bit more mixed. Some people really like her, some people don't. Clearly her performance has been lacking this year. But in general, though, she invests in innovative companies. But in general, though, what she recently said here is a very good sign and also a bad. So I'm going to explain that. So given the accelerated consumer preference shift towards electric vehicles, used car prices and the residual value of all gas-powered autos are likely to plummet, causing a serious loss in the $1 trillion auto debt market. So that is a little bit more of a warning and also a positive. So it goes to show that the demand is still there for EVs despite the higher inflation, as I've been saying in previous videos, especially based on the data. It's all showing that big things are still on the move for EVs. More so as well, like I said, in Europe. So definitely August, despite that increased amount of inflation that's been going on worldwide, definitely sales are still up there. So even 20% increase just in the Netherlands alone. Hyundai is seeing a broad worldwide 25% increase, and this is August. And then we all know about Tesla, and hopefully the same goes for Lucid once we hear our Q3 earnings. But still, it goes to show that definitely what Cathie is saying about the huge preference towards EVs is very much there. So that's a very positive thing for us as investors. The negative side of what she's saying is definitely is going to cause a little bit more of a turmoil within the broader economy. So this is where the $1 trillion auto debt market is going to be up for situation, and especially if you do couple that with a possible recession. And once again, when I say recession, I'm talking about 2008 or possibly worse. I know technically and for legal terminology, we are in a recession right now. So this is kind of where I'm getting at. But even looking at this chart right here, as far as the index, the used vehicle index, it is starting to plummet. And I do anticipate, even with higher inflation still around and all that fear, it most likely is going to continue to drop, especially more so with all the huge incentives out there and just a lot of global movement towards climate change and things like that. So definitely EVs are going to be the future. I think we all know that. Just it does look like, based on a lot of the data that's been coming out, that it's going to cause a lot more turmoil. So let me know your thoughts on that. Definitely a positive and a negative in one statement. So definitely very interesting, but Cathie has been wrong, like I said, many times. So she could be very wrong about this. So still, it is what it is. This is why we invest in EVs. This is why it's going to be a very bumpy road as we're experiencing, but in the long term, it's going to be very beneficial. That's how I see Lucid as in the bigger picture. But today is a little bit more of an abnormality. So especially more so it being a Monday, big money is starting to get back in, if you want to call it that. So this is all the transactions so far on the dark pool. I know it doesn't seem like too much, but based on even Friday and Thursday of last week, it's night and day. Plain and simple. So a lot of big money is starting to get back in, and this is where a recent article that I do want to talk about and ultimately why we invest in Lucid. So, and even more so, it does look like it's taking a little bit more of a further dip. So definitely, if you haven't taken a look at my video yesterday on how low Lucid could go, especially more so for this week with CPI data and all the fun jazz out there, definitely shows that we could get more so around the $12, if not $11.50, around that range. But that aside, there's this article that does go over here. 3 electric vehicle stocks down roughly about 80%, give or take, that billionaires cannot stop buying. So I think just reading that title, I knew that Lucid was going to be incorporated in that, because Lucid, despite on a comparison basis with any other EV, we have a huge amount of institutional presence. And I think that's an abnormality. Like, I don't know why so many people got in. And I think this words it very well, because in reality, if you scroll down, it goes over Lucid. So Lucid down roughly about 78% from its all-time highs, but people are trying to get the next Tesla. And I think plain and simple, that is why people are getting in. as I've always said, on a comparison basis to Tesla, we have a better balance sheet. In reality, we have a little bit more of a tech advantage in my own opinion. Keep in mind, I'm not a financial advisor. Do your own due diligence at the end of the day. These videos are for entertainment purposes only, but in reality, it goes over that same kind of concept. People who missed out on the Tesla rally, it sees a lot of upside potential. They see that once EV company does become very profitable, which in Tesla's case was 2019, definitely goes to show that when Lucid does get to that growth, we're going to be a million times higher than this. Obviously, million is a little bit more of an exaggeration, but you guys get what I'm saying. It's going to go up significantly. And when it talks on a lot of billionaires cannot stop buying Lucid, that is very true. And it is now the latest time for 13F, so it's that time of season. Once again, we are going to see a lot more institutions getting in. So I've already given an update on this. As of right now, there's no new updates from the 10th, but even more so from Friday, there was institutions increasing in Q2 1,000%, 27%, 116, and given how much Lucid's actually fallen as far as a price point, it's been more incentivizing probably for institutions to buy and increase their position. So this is where I'm more so excited about the latest round of 13Fs, probably more so than any other of the previous quarters. So definitely going to be a very interesting time, because keep in mind, during this Q2, this is when inflation was running rampant, and this was when we were peak fear. So the fact that if possibly institutions increase it as much as I anticipate it, that might be enough of a little bit more of a momentum to get us out of that. So that's my own 2 cents of how I see things, but let me know your thoughts on what Kathy recently said, and also generally speaking about Lucid being a value enough so that a lot of billionaires continue to buy Lucid. So let me know your thoughts on all of that fun stuff. Given looking at the technicals though, just want to give you a quick breakdown on this. We are down quite a lot and on a very scary trend, but not enough so that we're outside the Bollinger Band. As I always say, when we do get out of that, 9 times out of 10, we bounce off of that and trends down, or vice versa. So as you can see right here, we went outside the Bollinger Band, trending down, and similar cases when we break down as well, it kind of trends up a little bit more of a support. So in reality, what is happening right now is a little bit more scary, not enough that we are going to cause a value rally. So looking at stochastic as well, we do have 24, so it is very oversold, but we do have that deviation, so red line above the black, showing a little bit more of a bearish sentiment. And momentum, it does look like basically since around the September the 22nd, just retail investors started to get the hell out of Lucid. So I think that's a little bit more of a fearful time, especially more so the recent GDP numbers as well. So I think if you are coupling everything together, it's a very interesting time. But I think in general though, a lot of value can still be sought out with Lucid. So like I always say, that's my own 2 cents on how I see things, but right now the technicals are looking very, very bearish. But with all of that bearish sentiment, what is going on usually does cause a little bit more of a value rally, as what we've seen many times so far. So most likely around the $12 range, we should see a little bit more of a value rally at that stage, or possibly, like I said in my video yesterday about CPI, if that is very positive, anticipate us easily going up very fast and very aggressively. And then people will kind of sink in and then realize that the Feds are going to be increasing the rate. So it's just fear after fear. Very interesting time period for investors, but you guys don't realize that yet. It's going to make you all better investors in the bigger picture. But with all that, don't forget to hit that thumbs up and subscribe, as those greatly appreciated. If you do like my channel and support the growth, take a look at my memberships, link in the description below, or just hit the join button at the bottom of the screen. With that, appreciate you guys watching, and let's all make a lot of money on Lucid.